Good morning, ladies and gentlemen. How's everybody doing? Hopefully, everybody had a good weekend and ready for another trading day. On the flip side, the market is on a green move, at least so far this morning pre-market since I last checked, so that is good. So we'll wait a couple minutes here until some people get out of bed and roll on in. All right, so first things first, market's kind of on a green note. There is really no penny stocks to trade today unless there's something that pops up in the next kind of couple minutes or 30 minutes before market open or whatnot that I haven't already seen. We don't really have any good penny stocks to trade, so primarily today's main focus is going to be on mid-cap to large-cap stocks and generally trying to have more of a bullish outlook than bearish just because, well, market's green, so that's probably how we should think. Okay, so good morning, Lost One. Glad to have you in. YouTube notifications must be going out pretty slow today considering we don't have that many people in yet, so didn't really want to start sharing the screen and jump into anything until we get a good amount of people in because I already know what's going to happen. We'll go over it and then we'll have to re-go over it. What's going on? Good morning, good morning. There they are. How's everybody doing? All right, now we'll start getting into it. All right, so yes, first things first, market green, yay. Nonetheless, I would assume we're probably, most likely going to have a bullish day. Again, look at how we consolidated, right? We consolidated we had to kind of that green day move, hung out, consolidated all Friday, right? I'd be very surprised if the market just came and rolled over through all that consolidation from Friday. So again, expecting more of a green move. So looking for a green move up to, maybe towards like 300 ideally. That's kind of what we were saying last week. If you look, you can kind of see that red dotted line at 300 is just above us. So we'll definitely be looking for a move up there. We've broken consolidation. We're squeezing. So nonetheless, green in the market would expect that that's probably what we're going to be seeing today. Brad? No, Brad, you do not. To answer your question about the course. No, once you're in, you're already in. It just kind of gets reorganized and updated in that. So generally, Christian, there's no. Really, the telltale sign that you're asking is really the bond market when we have an inversion curve in the yields, which we've already gotten. That's generally a good sign that a recession is on the way, and it usually proceeds about 12 to 18 months after the signals happen, which they happen probably close to a month ago now, maybe a couple weeks. Really, the way it looks is in the next year to, again, 18 months, so close to even 2 years, so to speak. That's generally when it would happen if you'd go into recession. Let's see. All right, so let me touch on the first stock. This is going to be the main one for me so far today, unless something changes by the time the market, by market open. Tesla is probably going to be the main one for me. Ideally, just looking for a long play to be had over kind of 230. It might even start a little before the price of 230, but just looking for a long play over kind of this 230 top, 229.70s. So you can see we kind of bounce, pull back, bounce. Now we're really into a squeeze and a breakout position, right? We could very well break out from here over 230 and have a nice long move, probably up to 232 to 233. Right, and so if I go to maybe a 20-day chart here, you can see this is the top. Okay, and we've pulled down, bounced. Now we're curling here. So again, this whole kind of setup's pretty much bullish, right? We have this long move up, then we pull back more. And so now it's almost created like a lopsided inverse head and shoulders, which I don't have my drawing tools, but if you look, it'd be like down, curl, head, back up, right shoulder, potential breakout to test the left shoulder's armpit there. So again, we're really just looking for kind of a breakout over this 230 area. Nothing much more to it. And considering the market's green so far, that does help a little bit. So again, it's pretty straightforward. If this doesn't break up and go over 230, again, it's just going to go down, most likely, right? It actually could go down and then it could bounce up, but ideally, the significant, that's the other thing is, right, it's everyone's like, oh, well, what's this going to do? You don't know exactly how a stock is going to move on every single movement, right? We don't know if it's for sure going to go up right now, or if it's going to be 10 minutes of consolidating and then it goes up, or if it's going to be a dip first, back up to consolidate in a U-shaped breakout pattern. We don't know all of that, right? We can't predict the future of what's going to happen. What we do not have to predict, or what we already know, is a specific price point that is significant, and significant action can happen around this price point. So whatever else happens in the in-between, we really could care less about, so to speak. It's more or less what's going to happen as we start getting to these significant points within price action. All right, so again, it could go down, and then it can go up, and then it can go down, and then it can go up, and it can go down, and it can go up and up. But as soon as it gets up close to that 230, as long as the volume's there and the chart formation's good, then yeah, we could still see a breakout over that level. So for me, I do strongly believe that the 238 price is kind of that significant point. Initially on Tesla, your significant price point was like 228. I remember I might have talked about that with you guys, 228. Right? And I was actually looking at it here on this day to get over 228 to squeeze. Didn't do it. It rejected, came down. We bounced up. We went back over, back under, back over. Now we're back over. Right? So you can kind of see we're kind of consolidating and chopping around the 228. So now we have the new price point, which is just about 230. Right? So if we can get up and over this squeeze, I'd be targeting kind of this previous top right here, right in that level. Okay? Wilkes, I mean, picking an expiration date for an option, I mean, rule of thumb, if you're going to, a rule of thumb is always, if you can give yourself more amount of time, that's good. If you want to trade a weekly expiration, does it mean you should go a month out? Yeah, maybe not. That's really just it. The longer you go out an expiration date, the more premium you're going to pay, whether it's your put or your call. So again, farther the expiration on your option, the more money you're going to have to pay in premium. Okay? Farther you pick in your expiration may change your farther you pick an expiration, you might have a farther delta, or a lower delta. You probably have a little bit of a lower delta, lower volatility. So it'll change around your Greeks a little bit, probably not too dramatically, but really when it comes to picking expiration, it's really just you saying, I'm going to be correct within this amount of time. So really just take a look at whatever it is you're thinking of trading and be able to tell yourself, I will be correct in this amount of time. That way you're not losing from time, right? Because it would suck to take a weekly call with an expiration date that expires Friday, right? So you get in Monday, expires Friday, and then the move that you're looking for happens next week, Tuesday. If you just would have went out 2 weeks or 3 weeks, then you would have been fine. But since you chose, such a short amount of time frame, you were still wrong. Like you're right, but you're wrong. See, that's a problem with options. You can be right and still be wrong. Whereas with stocks, you can be right, and that's just it. You're right. Because when you own stock or you own shares, you don't have to worry about the time frame to be correct by, as long as you're just right in the direction. So with options, you have to be right in the direction and right in the time, and that's why you can make so much more money or lose, significant amounts of money. But that's why you can make so much more money with less money, because it's you playing a harder game. You're picking direction and you're picking time. With stocks, you're really just picking direction, and you could care less how long it really takes, so to speak. NASDAQ, SE, yeah, I would agree that Roku is definitely attempting to move higher. Advice on T, we're going to talk about T. It's on the list here. As if you don't have to trade with leverage, I would assume most brokers don't. It's not mandatory to trade with their leverage, so you would just use the amount of money in the account that is your capital, and then you wouldn't be using other leverage, and that would help you. And that doesn't really help you manage risk, because yeah, that's not, having more leverage doesn't necessarily mean you're taking more risk, shall I say. It can be a riskier thing to do depending on the trader themselves. But yeah, just what's going to happen is you're just upping your position size. That's all that happens, right? The risk is the same, if I may. The risk, and that's the other thing, is risk is such a tossed around word, but again, you're just upping size. So the risk is really just the same, right? If there was only one, so like for example, if we were looking at trading any stock and we could safely identify that there is a 1% loss, right? Like that's as much as we could foresee the stock going down, 1%. Then clearly the risk would be 1%, right? So let's agree that there's just a 1% downfall risk potential. Whether I had $1 million or I had $2, the risk is still the same, 1%. The risk of the individual trader losing more than one another is greater with a heavier position size. So it's more of like depends on how you're tossing the word risk into context. If you're talking about risking losing more money, then yeah, the more money you risk or have on the table, the more money you lose. But the amount or percentage of the trade that you risk is usually the same across the board. So when it comes to trading, generally risk is all the same. Whether you're using more money or less money, it's just more risk to the individual trader and their capital than it is the actual trade. The news, I haven't actually looked at the news today in Tesla, but the news was that some of like 16 cars or something like that from Tesla would be exempt from tariffs or an additional tax from China. And that was the news that boosted them up this day. And then it got sold into, and now we're kind of grinding back. Casey, I was thinking AMD could be on the means of a reverse. I'm going to touch on that, but let's first go take a look at Lulu. Lulu is going to be quick. So Lululemon, just follow this for continuation. I have nothing more to say than simply follow Lululemon for continuation. If any of you guys have watched many of my videos on YouTube or following the streams, then you'll know exactly what I'm referring to when I say watches for continuation. It's pretty straightforward. Earnings play, good day. Stock remained at its highs, didn't sell off the day of its earnings. It's now up a little bit pre-market today. It's good to watch this for continuation over the previous day's highs or maybe a little bit before that, but still a long play on Lululemon. Okay, cool. Now T, if you look at AT&T today, it was just ripping. And now it's starting to sell off. Okay, so any hooser with AT&T, this was just a straight shot on some very random, very speculative news, if you ask me. Long story short, it's some guy saying that the price of AT&T could be over $60 or $65. The company would do this and would do that, blah, blah. Anyways, the thing started just shooting up like a rocket today. So again, this is definitely just kind of like a news catalyst. There's not really much you can do with this because it's just a news catalyst of a potential idea that, they can go higher to $65. Basically, the news is that the price of AT&T could get to $60 by the year 2021. So it's just kind of creating this small little hype and momentum. For me, honestly, I don't even think I really want to be long on this. Right now, it's too soon to even tell what you want to do with it because there's no chart formation. There's nothing. There's just an up move and a pullback, really. That's all it is. You don't have a higher low. You don't have a lower high. You don't really have anything. So for me right now, it would be simply just watching AT&T, right? So what I could tell you right now is there's an identifiable short play, right? So if by any means, magically, when the bell opens and AT&T starts its day off, if it just squeezed all the way right up to highs towards $40, it would be a short play, at least right there, right? So I can already see a play, but it's probably not going to happen, right? If this magically squeezed all the ways up back to the pre-market high, you could short that and probably win. So for now, for me, most likely, I'm just going to remain bearish on AT&T for the course of the day. And then you got to think, too. You got to think. This big move that you're seeing is from 36.30 to 36.30 to 40. So it's about a $3. What did I say? 36.30. It's a $3 and like 70 cent move. Okay. from 39, or sorry, from 40 down to where we're at, which is 38.60. So that's $1.40, and we say it was 3.30. So yeah, I mean, this thing has about a $3.30 range, right around there or something. It's already pulled back about $1.50. So in reality, it doesn't have much more room to pull back until it's retraced this move 50%, which means it's pretty much done on the downside for at least now. So I'd say you're probably going to see more of kind of just like a back and forth kind of choppier start to AT&T today. I don't think it's going to be anything significant, but still worth keeping an eye on. Well, trend, it really depends. If you're talking about in the equities market, I mean, yeah, when that happens, it's signaling that. So again, you have to understand the relationship between equities and bonds, and then you'll be able to understand the yield curve better. But to give you a quick little insight, basically what happens is there's two things. So smart investors, if you've ever read the book Intelligent Investor, they'll talk a little bit about this too. But when it comes to equities and bonds, I mean, bonds are pretty much seen as like a safe route of returning money, right? So for example, let's say that if you're an equities investor generally and you're looking at the market and you're looking at companies and you're looking at how much we've moved in the market, et cetera, and you're like, well, I see maybe, 3% growth this year in the market, and I don't think we're really going to get above 3%, right? So you look and you go, I see potential 3% reward, but I could also see a potential 15% decrease, right? So reward 3%, risk of losing 15%. But I could also go to the bond market and I can strategically get about 3% right now in the bond market with no 15% risk. What are you going to do? You're going to buy bonds, right? Again, the smart investor will always look at the risk to reward and which is going to be a smarter or more favorable play. And if you go and look at the market and you can only see yourself getting 3% with a lot of risk or potential big drawbacks, and then you go look at the bond market and go, shit, I can get 3% over here with basically no drawbacks, what would you do? You would start decreasing your position in equities, or you would stop buying into equities, just let it ride, and you start sizing up in the bond market. So as the markets get overbought and companies become overvalued, there's less deals, companies become less favorable to buy, and then when you look at risk factors and reward factors, if something else is more appealing than an equities market, the money will move to that section, right? And then you'll take away from the equities market. When you start to see things like the curve happen, or the inversion curve, yield curve, best way I could explain that is you're really looking at a sort of longer term bond and a shorter term bond, right? And what ends up happening is people are seeing, well, actually, let me rephrase that, is that it becomes very uncertain for the long-term bond, right? When it's very uncertain that what's going to happen 10 years from now becomes uncertain, people feel that they can predict what's going to happen in the shorter term more. So ideally what happens when you see that curve happen, or the yield curve, people are becoming uncertain of what's going to happen 10 years out in the line, because no one can predict exactly what's going to happen 10 years from now. But it's easier for someone, or someone feels it's easier to predict what's going to happen in the short term. And that's why you're seeing that difference from the long term to short term, is people are becoming more fearful of a bear market, and they're starting to fear that. And they're starting to predict that we're going to have a down move in the market, or that's easier to predict that we're going to have a down move in the market in a shorter time frame versus buying a long-term bond. We have no clue what's going to happen 10 years from now. That's basically what's happening. You could look, P. Jones, you could look for bearish divergences too. Yeah, ACAD, that was one that I was considering watching. We can touch on that real fast, and then we'll touch on AMD. Yeah, ACAD, I mean, that's something you can watch. It's up pretty big. Again, it's kind of like the same scenario as, same scenario as AT&T. Started at 23, moved to 51, pulled all the way back down to a low of 38. So it pretty much already, I mean, we could probably figure it out. I mean, if I just do this. So retraced almost 50%. So again, there was a long and there was a short. And now it's just kind of the intraday grinding chop where you're looking for the intraday setup right now. So yeah, I mean, this is something that's worth watching. I mean, either way, it's still up like 20-something points. It could have good range. You could see easily 4 or 5 point swings on it. So it's worth watching. I don't really understand the news or haven't really looked at the news. If there is any news, I really have no idea. But ACAT I did notice this morning up pretty big. Generally, I try to stay away from like biotech and pharmaceuticals. They usually just don't have the good trade for me. But this is an interesting stock, and maybe some of you would like to watch it. All right, so over to AMD, because I was looking at AMD today, and excuse me. AMD was interesting. I know someone's asking, is it ready to bounce? Yeah, it could. I'm not a big fan of the setup personally. I don't really like the way it looks for a bounce. I actually want to see it just get smoked. Because here's the thing is, this right here, this dip, or let me try and highlight these better. Here you go. Like that box that I just drew, that's a strong support area. This right here, it's not as strong. It can be because of these little tops in here. So it can be, but it's not as good as this one down here. So for me personally, I'd like the dip buy down here on these low points around like 29.30 more than or 20, yeah, like 29.50. That's where I would personally be liking the bounces, right? And what I fear that would happen from trying to dip buy in this, right? If I'm right, if you try and dip buy this, we'll roll over and it will dump everybody out and it will turn into a big rolling over candle and you'll see it get bought up down here. Yeah, it's because YouTube, again, YouTube just sucks. They have no clue what they're doing. Yeah, yeah, you're right, meat. Yeah. Oh, wow. Yeah, George C. I mean, it just comes from practice. I mean, everyone is. I will say this: everyone's so. It's the most impossible question to ever answer. And I've done it, and we've done talks on it. There's ways to talk about it and bring it to the open, and it might make it easier for you. But end of the day, emotion, you're never going to get rid. You just can't get rid of emotion. It's literally impossible. You don't get rid of it. It's always there. You just get better at understanding when things are more in your favor, right? You're just understanding when things are better setups, right? Stronger setups, better to trade this rather than trade that. And then you get used to, right? You get used to seeing your P&L go up. You get used to seeing your P&L go down. I've been here before. I've been there before. And it's just experience. It's just like anything. But yeah, emotion is crazy because you don't feel this. I mean, yeah, it's a roller coaster of emotion when you're trading, right? Because you see your P&L go up, you see it go down, but it gets easier as time goes on, and you just get better at dealing with it, honestly. But no, it's a highly stressful. It can be an extremely highly stressful game, and you don't really know it until you do it. I mean, yeah, there's days where like you lose money, it just feels shitty, just like fuck, that sucked. Right? That's how you feel. It's just like, fuck. Seriously. Really? You just did that? You've done this how many times and you're still going to do that? So again, you'll make the same mistakes. You'll just get better at not making them as often, and you'll try to get to the point where you don't make them anymore. And there's mistakes that I've completely wiped out of my trading game, where I don't even do them anymore. I've just seen it so many times. I'm like, nah, not today. Not going to happen. So with time and practice, it gets easier. Brad, so no, not really. So again, you understand that tax benefits in terms of what you're doing. So you're saying in terms of being like a home business. I mean, you could. I mean, you could go create an LLC and go through all the paperwork and you could do all that, but you don't even have to because again, as a trader, you get the same deductions you would as being a business owner because as a trader, who do you work for? You work for yourself. So you already are basically a business owner of your trading company through your individual trading account. So the office that you work in gets to be write off. Your computers get to be written off. Any subscriptional service like joining Boiler Room Trading, you get to write off on all your taxes. Any program or course or anything like you buy for trading, you get to write off. Any softwares, you get to write off. You're already running a business, so anything that has to do with that business is a write-off. Nope, you're not. If you have Randy, if you have a cash account, you're not subject to the pattern day trading rule. If you move over to a margin account, then you're subject to the pattern day trading rule. How to write off? Do you need an LLC? No, you don't need an LLC. What you need is an accountant. That's what you need. No, didn't buy NSP. Do you pay taxes if you trade it only 10 times in a year? Possibly PG only. The way it works here in the United States is if you have an income, and this might be off a bit. It's been a while since I've checked up on it, but I think your income has to exceed $600, and then if you exceed $600, then you have to report your income. So if you made $500 trading, in theory, you don't have to report that income. But then if you also work a job and you made 50 grand a year, then you still have to report the $500 as income. So basically, as long as you don't make more than like $600 in a fiscal year time altogether, then you don't have to report on taxes. But if you make more than $600, you're going to have to report every piece of income that you make. So yes, if you make 10 trades and you made $100,000, then you're going to have to pay taxes on that $100,000. And if you made $100,000, then you're probably going to be paying 30% of your income. So you'll end up giving away, giving back, 30,000 or close to 40,000 of your 100,000 to taxes. So yep, that's how it rolls. All right, guys. With that being said, it's 9 o'clock. I'm gonna get back to our private group. So thank you guys once again for tuning in, as always, and I'll see you guys tomorrow morning for another day.